This is Keisha here at TradeWithResolve.com, and welcome back to another episode of Trading Essentials. Today's topic will be, what is a stop loss order? Now, if you're brand new to the stock market, a stop loss order is simply an order that you can use to exit your position at a loss. And it's basically designed to limit your loss and prevent large losses whenever you are trading. So you can actually determine before you enter into a trade, you can plan out what is the max amount that you are willing to lose on this particular trade. Now, there are a variety of stop loss orders. There is the stop limit order, a stop market order, and a trailing stop order. All right, so now I'm going to head over to my trading platform so that you can see an order entry form and we can go over each of the different stop loss orders. All right, so here is an order entry form. So there are a variety of stop loss orders. So there is the stop limit order, a stop market order, and a trailing stop order. Now, a stop limit is whenever you're telling the system, I want to exit the stock if it reaches this specific value. So for example, in this case, I have Netflix open. Let's say we're currently in Netflix and we want to exit the trade at $150, for example. You can tell the system to sell my shares at $150 if that price point is met. A stop market order is whenever you're using a market order to exit the position. So you can say exit the stock at $150 at market, but you may not get triggered exactly at $150. It's really going to be based off of the best price at that moment in time because that's what a market order is. And then there is the trailing stop loss when you can set a specific percentage or a specific value to trail your position as the price moves in your favor. So for example, let's say you want to set a trailing stop of 50 cents. So as the price of Netflix in this case moves in your favor, your trailing stop will increase by increments of 50 cents basically. So again, with the trailing stop order, you can set a stop price at a fixed amount or you can use a specific percentage. So let's say you're going long. So as the price of the stock rises, your trailing stop loss will rise as well. But keep in mind, the trailing stop loss will never move in the opposite direction of your target. It's only going to trail the price of the stock when it's moving in the correct direction. I don't personally use trailing stops because you're really not basing your stop loss off of the price action. You're just kind of choosing a specific percentage point or a specific value to trail the stock. And to me, that's not very methodical. You're just kind of guessing. But some people use the trailing stop order and they may have success with it. But for me, I like to base my stop loss on the price action and the setups. I like to use technical analysis to determine my stop loss price. And I don't, like I said, I don't use the trailing stop loss. But if you do and you've had success with it, certainly leave that in the comments. I'll be interested to hear more and have a conversation about trailing stop losses. So those are the three stop loss orders. You have the stop limit order, the stop market, and the trailing stop. Now, another tip that I'd like to give you is whenever you place a stop loss order, be sure that you never move your stop loss order away from your target exit price, right? So let me give you an example. All right, so let's say we enter into Netflix here and we want to have a stop loss order in the system. And we're going to use yellow for stop loss here. All right, so let's say we enter into the trade at this green line, and then we decide to place our stop loss. Let's say we place our stop loss right here. And let's say our target exit price is up here at $190. So the key is, so we're expecting the price of Netflix to increase. Now, one of the key points is never move your stop loss away from your target. Now, our target is up here at $190, for example. If you are going to move your stop loss, it should always be in the direction of your target, never in the opposite direction, because if you're moving your stop loss in the opposite direction, you are increasing your risk and you are putting yourself in a position where you can take a larger loss than what is really necessary. So be sure that whenever you're using a stop loss order, you don't want to be moving it in the opposite direction of your target exit price, only towards your target exit price to lock in profits along the way. So that is one of the keys that I wanted to share with you. So again, a stop loss is for your protection. A stop loss is your protection factor, and it is used to prevent large unnecessary losses. So if you are losing large amounts in the stock market, it's really simply because you are allowing it to happen. And you have to take control of your trading account and protect your gains. So you have to manage your risk properly so that you're not giving back the profits that you've made from the stock market. And that's what's really key when it comes to trading. It's all about risk management and making sure that you are sticking to your trade plan. And another thing I'd like to note is you may have heard of a mental stop loss or a hard stop loss. And for me, whenever I first started out, I used to use mental stop losses. And what I would notice is whenever it came time for me to exit the trade for a small loss, I had a bit of trouble pressing the sell button so that I could take a small loss. So instead, what I would do is I'd just say, you know what, I think the price is going to come back to my break even point, so I'm just going to wait it out. And then before you know it, you're down $50. Next, you're down $100, and then you're down 150, so forth and so on. So when it comes to a mental stop loss, my recommendation is to be very, very careful. Now, if you are disciplined and you have created the habit of exiting the position whenever you are supposed to, then certainly keep using a mental stop loss. But if you are having trouble like I used to, then I recommend using a hard stop. So a hard stop is when you actually go in and, for example, maybe you're going to use a stop limit order and you're going to place that in your trading system so that if your stop loss is hit, you will automatically exit the trade. The system will automate that for you. You don't have to worry about pressing the sell button. It will happen for you. So if you have the discipline, then yes, certainly use a mental stop loss. But if you're getting started, if you're just now getting started in the stock market, I recommend using a hard stop because it really does help you with discipline and it really gives you that protection factor. And also, let's say that there's a power outage that happens while you're in a trade. If you have a hard stop already placed within your trading platform, even if you lose power, your stop loss will remain there. So let's say an hour later your power comes back on. Well, guess what? If your stop loss was hit, you're going to already be out of the trade for a small loss if you were wrong about the direction. But if you were right about the direction, well, you would still be in the trade and you would be profitable at that point. But if you didn't have a hard stop loss set, then things could have gotten very catastrophic and you could be down quite a bit on your position because you didn't use a hard stop and the power may or may not have come back on for quite some time. So it's just something to keep in mind. So that is why I use a hard stop loss because it protects you in many different ways. It protects you should your power go out, and it also protects your account from experiencing very large drawdowns. So in the comments section, if you would, let me know if you use a mental stop loss or a hard stop loss and which one has worked best for you. I'm kind of interested in having a discussion about that. I hope you enjoyed this episode of Trading Essentials. If you have any questions or comments, please be sure to leave it below, and I look forward to seeing you in the next video.